Hello and welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra. On this show, we get you all the updates of how the markets have been trading in the first half of trading action. Also help you understand that what are the fundamental experts saying about the markets and the trend going forward. How are they approaching the market so that you can take a cue on how should you peg your investments in the current market scenario. Joining us is a special guest today, Mr. Kranthi Bathini from WealthMills Securities joins in. Mr. Bathini, good afternoon. Thank you very much for joining. It's a pleasure to have you on Money9 with us. Let me begin by first understanding from you that we are sitting 1 year ahead from the lockdown, from the time when the markets had actually slipped. The Nifty had crashed to 7,511. I wanted to understand from you how this 1 year has changed for you as an investor. What are the learnings the investors have taken in this one last year? And, what were your thoughts perhaps that day, 1 year behind, 24th of March 2020 when the markets had crashed? What were you thinking about the markets then? And how have you seen them rising? Have they surprised you? Were you already penciling in? Your thoughts?
Sakshi, one thing is always there is tomorrow. That's what the lesson we learned during this 1 year of lockdown. And one of the phenomenal thing what we observed during this time is in India, the increase of awareness towards equity market. This is the main phenomena we observed in Indian markets. Yes, of course, lockdown we never experienced in our lifetime. It's a new experience to everyone with respect to the lockdown conditions are concerned. But what we can cherish during this period is in India, equities are recognized as essential services. Thank God the stock markets are open, wide open during all this phase of lockdown period, and market infrastructure is in sync with the markets, and there is a complete stock markets are in a complete in randomly and completely worked during this period. That's what we can cherish. And as being a director in a stock market stockbroking company, running the things, coordinating with market infrastructure during this phase, and giving the uninterrupted services to the investors during this time is quite challenging, but we could able to do it during this period.
Absolutely, and congratulations for helping all the investors through this uncertain period as well, so that you help them calm their nerves as well. All your clients must be thanking you, because the kind of returns that the markets have got in this last 1 year is definitely that they are cherishing at this point in time. So what should investors be doing at this point in time? Things are a lot different now than they were perhaps 1 year back, with respect to the commodity cycle, with respect to all the asset classes that are performing now after this 1 year. The post-budget rally also we saw, and now it has calmed down. So how should investors really take up the challenge of this next 1 year, coming year? How will that be for markets?
First thing is, Sakshi, investors should know one thing is, okay, don't miss a dire situation in stock markets. When there is a lot of uncertainty, that is the best time for investors to cherry pick or to have some exposure. When the lockdown has been announced, there was a lot of confusion, there is uncertainty, and human being, the current present living people never experienced a lockdown in their lifetime. But people who have faith and trust, they made money, and just 1 year passed and we are sitting at a humongous profits today. So going ahead, investors need to have a stock specific approach and try to look for value bargains, where the value. So when we stick to the value bargains, that's where the money can be made, wealth can be created. So at present, investors need to have a stock specific approach rather than a sector specific or macro specific approach. Stick to stocks and look for value.
Absolutely. I wanted to ask you, so which, stocks should one really focus on? We have spoken about some of the stocks that you spoke about on our show on Money 9 before also, which have given handsome returns to investors in a very short period of time. So let's just first talk about those before getting into the new stock recommendations that you would have. The star picks from your portfolio include names such as Piramal and Hemisphere. So let's start first with Piramal. I want to ask you that, of course, the sharp run up has happened. We have seen a huge surge after you recommended. The investors have already tapped in a lot of profit. So, what should they be doing now with this?
Just to tell you, Sakshi, I still remember on 23rd March 2020, when the lockdown day announced, we
Yeah.
released a report to our investors on Piramal when Piramal was trading at
Okay.
860 rupees.
Okay.
Today, Piramal is trading, it touched 2000 levels and today is at 1870. So the
Right.
people who invested at that level, they made 3x return at present. But we advise it to investors on on our show, first show on 27th Jan at 1400. The stock has given a return around 40% till date.
Right.
What convincing in this stock is the management and the business position. So there is a lot of uncertainty with respect to their financial sector is concerned, but we are quite optimistic on the fundamentals of the company, and we went way out and made our investors to invest in these kind of strong business models. Uh, the market cap has almost tripled from March 23rd, and we believe still it is a value buy. There is an embedded value in this company. They have a intrinsic natural hedge in the company. 50% revenues comes from pharma, 50% revenues comes from financial services, and they are laying their path towards emerge as one of the strongest NBFC in India in terms of offering financial services in India after acquiring DHFL
Right.
recently. So we believe
Absolutely.
still Pyramid is a value buy at every dip.
Okay, so still Piramal is a value buy. On every dip you can still accumulate for the returns that we've already seen and the kind of returns that are expected in the days to follow and years to follow as well. Let's talk about Hemisphere now. That also call has actually shot up and it has given wealth generating returns to investors after your recommendation. So what is your call on that stock now?
Hemisphere is a value buy. It is a land bank story. The company is available when we were started doing research on this company. It's a value buy, but the cash flows will take time to emerge for this company. How the company is going to execute their projects, how the company is going to turn cash positive in next 4 5 quarters will determine the future of the company. When we
Sure.
advised Hemisphere in the first time on your show, it was trading around 130 and it touched a level of 200, currently trading at 157, 50 levels. But still, it is value is there in this company. But going ahead, what leads this company is how the company is going to execute their projects, how the company is going to monetize their land bank, how it's going to turn the cash positive is the main key factor that determines the stock price in the days to come. But
Sure.
those risk appetite investors definitely invest at these levels also.
Okay, risk, taking investors can still invest. Otherwise, all the other investors can go book partial profits, but a whole lot of run up still remains to be seen on this stock as well. But a lot of value bargains is what we are focusing on. So even now, in your portfolio, which are the stocks that you are looking at for value buys, and you would, advise investors to tap those as well?
Sakshi, after 1 year also, all of a sudden we are talking about COVID again.
Yeah.
So there is some respite, 4 5 months respite, and I stay in Mumbai, so we are back into the restriction life again. Seems to be.
Yeah.
We need to wait another couple of weeks time to how things that's going out. And the value pick I'm going to see is Wakad. The stock has rallied from a level from 300 rupees to it touched 550, and there is a sharp correction in this stock as there is a consolidation in pharma business. Most people in India, they think that what are the stocks that are completely taking the advantage of COVID, like the Serum Institute and Bharat Biotech, which are unlisted entities in India. But Wakard, one of their subsidiary, makes COVID-19 vaccine from AstraZeneca, and they're well positioned, and they started supplying to UK, and they may start manufacturing in India also. That's the caveat for this stock. This stock can be a value buy at the current juncture.
Okay, so current levels would be important to watch out for. Wockhardt can also be a well generator in the long term, so you can keep an eye out on this pharma major as well. From the auto ancillary space, Mr. Bathini, what would you pick for investors in terms of value buy?
Sakshi, what lockdown teached us last 1 year is, uh, before 1 year we used to prefer a ride hailing apps like going into Ola, Uber. But now
Right.
I prefer to travel in a personalized transport. That
Yes,
led the humongous rally in auto stocks. So
sure.
one of the key beneficiary in this revival and this auto rally is Motherson Sumi. It is in a best position. So investors at this current level, they can buy the stock. It can be turn out to be a value buy for the investors in next couple of quarters.
Okay, and the last pick from you, what would that be for today?
The last pick, I prefer a metal allied company and a carbon story. Rain Industries is one of the India's largest and world's largest, in fact, calcining coke manufacturer, and the producer. So this calcining coke is used one of the key raw material for aluminum. As we witnessed a complete rally in metal stocks, Rain Industries is going to follow the suit. So it is in a best position, and the next couple of quarters the revenues are going to increase at a compounded basis, and at the present level of 143 the stock is a very good value buy for the investors.
Okay, Rain Industries, a very good value buy at the current levels of 143. Thank you very much, Mr. Bathini, for sharing with us your stock recommendations, and congratulations yet again for the star picks that you have shared with all our viewers on Money 9 yet again. Let's move on to see how the markets are trading at this point in time. If you really see, the markets have deepened the correction from what they had been trading at in the early morning hours. The correction is deeper now at 1% loss for the Sensex and the Nifty both, and you can actually see that 500 points of loss is what we are sitting at as far as the Sensex is concerned. The Nifty Bank too, if you see, 562 points gone there. So that's where the underperformance is really coming in from, 1.6% downtick there. But the broader market space has somehow trimmed the kind of losses that we had been seeing. Now, in fact, small cap index has now slipped into the red as well. 0.5% gone there for that one as well. 20,335, the level for the mid cap index, 100 points of a loss and 0.5% of a downtick is what we can see for the market. So overall, the markets are deepening the cut. There is a volatile trading session that we are looking at right ahead of the expiry tomorrow, but this could be seen as an opportunity to add on to the value buys, just like how Mr. Bathini pointed out, because the long run of markets still looks quite positive. So with that, we wrap up this edition of Market Meter. A whole lot on the other side, so stay with us on Money 9.